Welcome back to the Deep Dive. Today we are strapping in and taking a hard look at the world of crypto finance, specifically the ascent of Kraken. They're one of the oldest exchanges out there and, frankly, one of the most interesting players in the whole space. We've got a whole stack of source materials here, everything from confidential S1 filing data to investor decks and competitive breakdowns. And what they show is, well, it's a fascinating story. Kraken isn't just surviving the crypto winter. They seem to be rocketing towards a massive public offering. So our mission today is pretty straightforward. We need to unpack the specific moves, the financial engineering, and the regulatory chess game that lets a company like Kraken even begin to justify its staggering valuation.
It is absolutely the perfect time for this. The sources are pretty clear. Kraken confidentially filed their S1 on November 19th, 2025. That's a huge signal. It means an IPO could be coming as early as, say, Q1 2026.
And it's the valuation jump it's kind of mind-boggling.
It really is. I mean, what's exceptional is the speed. Just a few months ago, the chatter was around a $15 billion valuation. Now, after an $800 million capital raise, we're looking at a firm $20 billion.
$20 billion? That's a dramatic premium. I mean, given all the volatility we've seen, especially with exchanges, you have to ask, what exactly is making institutional money believe Kraken is worth that much more than everyone else?
Exactly. And the answer really starts with their foundation. It's built on just undeniable resilience. They didn't just survive the 2022-2023 bear market. They actually used it to strategically reposition. If you look at their financials for fiscal year 2024, the rebound is crystal clear.
Okay, yeah, let's focus on those 2024 numbers, because that's where you see this blend of recovery and just explosive growth. Revenue hit $1.5 billion. That's up 128% year over year. And it wasn't just, growth at all costs. Their adjusted EBITDA was a really solid $424 million. That suggests they're in control.
That control is so crucial. And if you look at the raw activity, their trading volume hit $665 billion in 2024. The momentum is carrying through, too. Q2 of 2025 was already at $186.8 billion in volume. So, they're on a path to potentially hit $1 trillion in annual volume if the market holds up.
But volumes can be fickle, right? We all know that. I think where the story gets really compelling, and probably what the underwriters are looking at, is the quality of their user base.
That's the key. That's where you go from just scale to monetization efficiency. So Kraken has about 15 million clients total globally, but you have to pay attention to the funded accounts. These are the people with an active balance, the ones who are actually trading.
And that number is what really jumped out at me.
It's skyrocketed from 2.5 million at the end of 2024 to 4.4 million by the second quarter of 2025. That's a 37% year-over-year jump in their most valuable users.
And they are incredibly high value. The ARPU, so the average revenue per funded account, was around $600 in 2024. But if you drill down to just the consistently active traders, some estimates put that number over $2,000. So Kraken isn't just chasing volume. They're really, really good at attracting and keeping these heavy, sophisticated traders who generate reliable fees.
And that success ties directly back to their internal discipline. I mean, the sources point out that after the 2022 layoffs, management was ruthless about optimizing costs. They stabilized their headcount at around 1,700, maybe 1,800 people by mid-2025.
And that headcount number is one of the clearest signs of operating leverage in the source material. Their revenue per employee in 2024 was, about $0.75 million.
To give you some perspective on that, their main regulated rival, Coinbase, was closer to $500,000 per employee. Kraken is just running leaner and getting more value out of its platform.
Right. It signals to the market that this recovery is profitable, it's sustainable, it's not just a case of a rising tide lifting all boats.
Okay, so a solid financial foundation, that's clear. But let's be real here. 70 to 80% of their revenue is still coming from spot crypto trading. To justify a $20 billion valuation, they have to be selling a story that they're becoming something much bigger than that. And they are. They're executing a very clear diversification strategy. They're moving to become a full-service global financial platform. And they're using these high-impact acquisitions to kind of skip the line, to not have to build it all from scratch.
Right, like the NinjaTrader deal.
The NinjaTrader deal was the cornerstone of that pivot, a $1.5 billion acquisition in 2025.
And that wasn't just a big price tag, was it? That was them basically buying a fast pass to regulatory compliance for derivatives in the U.S.
Exactly. It's a direct injection of compliance. It lets them accelerate their U.S. crypto derivatives offerings by using NinjaTrader's existing CFTC and NFA licenses. It's a shortcut into a really high-margin market.
And it's not just derivatives. They're pushing into traditional finance territory.
Oh, absolutely. In Q2 2025, they launched commission-free U.S. stock and ETF trading for their American users. That puts them in direct competition with, Robinhood or even Fidelity.
And for their international users, they rolled out something called X stocks. And we've seen this mentioned, but for our listeners, what's the actual advantage of a 247 tokenized stock?
So what's really fascinating about X stocks is that they're tokenized versions of real stocks. This lets non-U.S. clients trade them around the clock 7 days a week. Settlement is almost instant. It just completely removes the old barriers of market hours and international settlement delays. It's Kraken using crypto rails to solve a traditional finance headache.
They're also making a huge play in payments, and this goes back to a key piece of regulatory work they did years ago.
This is where their Wyoming SPDI charter comes into play, the Special Purpose Depository Institution, Kraken Bank. This charter basically lets them operate like a state-chartered bank for digital assets. They can hold both fiat and crypto in custody. They're one of the only major crypto firms that can do this.
And how are they using that charter for payments?
Through their new app, Crack, which they launched in June of 2025. It's built for global money transfers. You can send crypto or fiat to over 160 countries. And because Kraken Bank is holding the fiat and managing the liquidity, they can leverage FX spreads and banking services directly. Most of their competitors have to rely on third-party banks for that.
And of course, we can't forget staking. After all that legal drama and a huge fine, they actually re-enabled on-chain staking for U.S. customers in 2025.
Which is so important. It shows their diversification isn't just about new things, it's also about winning regulatory clarity on their core crypto services.
That clarity. That brings us to what might be the biggest part of this story, the compliance premium.
Without a doubt, this is the biggest driver of that $20 billion valuation. It's not just about having licenses, it's about using them as a competitive moat.
Let's break down that moat. They were early. We mentioned the Wyoming SPDI charter from way back in 2020. They're registered with the UK's FCA, and they have a restricted dealer license in Ontario, a market where, some other big exchanges just gave up and left because of the regulatory pressure.
But the MiCA authorization in Europe, that's a gigantic strategic win.
Right, Micah. The Markets and Crypto Assets Regulation.
Yeah, it's Europe's unified crypto rulebook for the whole 27-member bloc. And Kraken became the first exchange licensed under MiCA through Ireland in mid-2025.
And why is being first such a massive deal there?
Because that one license allows them to passport their services across the entire European Union. They don't have to get separate approval in every single country. It gives them an immediate, efficient, regulated path to one of the biggest economic zones on the planet, while their competitors are still years behind.
Okay, so they've cleaned up their global footprint. But we have to acknowledge the bumps in the road. The sources mentioned the $30 million SEC settlement in 2023 over staking, the CFTC fine in 2021. Those are expensive lessons.
They were, but it's the outcome of those lessons that's driving all this investor interest now. The absolute pivotal moment was in February 2025. That's when the SEC dismissed its remaining staking lawsuit against Kraken, with prejudice, and with no new penalties.
And that phrase, with prejudice, that's the key legal term, isn't it? It means the SEC can't bring that same claim against them ever again.
Precisely. It is the ultimate clean slate in that specific fight. It immediately let them restart U.S. staking services, but more importantly, it validated their entire compliance structure. That win set a huge precedent, and it basically added billions in perceived legal safety for any institutional investor looking at this IPO.
You add that to their security record. They've never been successfully hacked, and their commitment to proof of reserves audits. It creates this image of being almost untouchable in an industry that's been plagued by a lack of trust.
That trust is the commodity they're selling. When big money wants a safe way to get exposure to crypto, they need to know the platform won't just implode. Kraken spent years building that fortress.
Okay, so let's turn this to the competitive landscape. Where does Kraken actually fit? We know it's not the global behemoth like Binance, but it's playing a different game than Coinbase.
Right. So globally, Kraken only has about 2% of spot volume. Binance is sitting at around 39%. So yeah, they're far behind on that front, but volume isn't the full picture. In the regulated U.S. market, Kraken is firmly number 2, right after Coinbase. They hold about 25% of the really critical U.S. fiat to crypto volume.
And they really own some of those specific liquidity channels.
They do. They command over 40% of the global stablecoin to fiat trading volume. Being able to efficiently get stablecoins back into hard currency is a massive strength, especially for institutional desks.
And when you put them side by side with Coinbase, it gets interesting. Coinbase is very retail-focused, faces all that public company scrutiny.
Yeah.
Kraken is now playing on Coinbase's turf-staking institutional services, but it's also diversifying in ways Coinbase hasn't touched. Stocks, payments with the Crack app.
And the comparison with Binance is probably the most favorable part of the whole IPO pitch. Kraken's comprehensive, legally solid regulatory posture in Canada, the EU, the US, it stands in such stark contrast to Binance's constant regulatory headwinds and opaque history. For any institution that has to check compliance boxes, Kraken is the obvious, compliant, scaled alternative.
A big part of that has to be their fee structure. Where do they sit compared to the others?
Their retail fees are usually in the 0.2% to 0.4% range. That positions them perfectly. They're a lot cheaper than Coinbase's standard retail fees, which is what attracts those heavy traders we were talking about. But crucially, they're a little bit more expensive than Binance's super low 0.1% fees, and that suggests a strategic choice. They're not chasing the low-cost retail masses. They're focused on clients who will pay a slight premium for security and regulatory peace of mind.
Which brings us all the way back to that $20 billion valuation. As an analyst, I have to challenge that. It just feels rich. Rich for a company that did $1.5 billion in revenue in 2024.
It's absolutely speculative. I mean, even the $15 billion number from September 2025 implied a big premium. That was roughly 10 times 2024 revenue and 35 times adjusted EBITDA. You have to remember, Coinbase's public multiples in 2024 were way lower, something like 8.6x price to sales and 16.4x EBITDA. Kraken was already being valued at almost double on an EBITDA basis in the private markets.
So when the bankers at Goldman and Morgan Stanley are pitching this $20 billion number, they're basically arguing Kraken should get a multiple greater than 35x on forward EBITDA. That's a premium roughly double what Coinbase has. What are they telling people to justify that?
They're selling three core narratives. First, the resumed hyper-growth momentum we saw after the bear market. Second, the clear success they're having in getting and monetizing a diversified, high-value client base with new products like X stocks and the Crack app.
And the third, of course, is the regulatory arbitrage. They're selling the value of that legal clarity, the MiCA license, the SPDI charter, and that huge SEC lawsuit dismissal. They're telling investors, this premium, this is the price you pay for the safest house in a very risky neighborhood. You're buying legal certainty.
And that legal certainty unlocks future revenue. The money from the IPO is critical. They're not just cashing out. The plan for the proceeds is aggressive scaling. More M&A to buy up smaller compliant exchanges, fully funding the launch of Kraken Bank, and just pouring money into R&D for things like DeFi and self-custody tech. They're positioning themselves for the long haul.
So this deep dive really shows Kraken's path is a story of a calculated long-term regulatory game paying off at exactly the right moment. They didn't chase every fad. They just built a compliant foundation.
They did. They came out of the crypto winter stronger, more diversified, and with nearly all their major regulatory problems solved, just as institutional money is looking for a safe way back in. Their entire IPO hinges on the belief that safety and compliance deserve a massive market premium.
It's a powerful narrative. Especially when you think about the history. Jesse Powell founded Kraken way back in 2011 because he expected Mt. Gox to fail. He built it around security from day one. So given Kraken's perfect record of never being hacked, pioneering proof of reserves, and now getting these first-mover regulatory wins, you really have to ask yourself, in an industry where trust has been the single most volatile and scarcest asset, what is the ultimate market value of a brand that has successfully positioned itself as the safest fortress in global crypto finance?